Jason Gammel is the head of oil and gas research at Macquarie. Joins me in the studio now. Jason, lovely to have you with us. Now, you're pretty upbeat on Repsol, despite everything that is going on and the prospect of the company not being compensated by the Argentine government. Are you maintaining that positive position?
Well, we're actually neutral on the stock, but we do see good intrinsic value that will accrue over time. But I think that the uncertainties that are still to be resolved around the Argentinian expropriation could really affect how the stock trades in the near term. Things like credit rating changes and changes to the dividend, which you mentioned. We do think that they'll have to decrease the cash payout as a result of the lack of cash flow from IPO.
I mean, this is, if you're a shareholder in this company, this is awful news. I mean, they are seizing the unit that makes up a fifth of the company's profit.
That's exactly right. I mean, it is the sort of thing that you don't see happen very often. Expropriation never works out well for the party that's being expropriated. It really is a worst-case situation right now. So
tell me then, do these declines that we're seeing in the Repsol share price, you say that it could create a good opportunity, that there's value in the stock, but is there also perhaps a good opportunity for predatory rivals?
I suppose that's exactly right. I mean, you do still have a very robust underlying upstream business that has had tremendous exploration results just over the last few years. So if the shares do come under pressure, we do think that there is that potential. It is difficult because it is a Spanish national champion, and that always makes it more problematic if you are looking on the acquisition front. But certainly we do see very strong value in the shares right now.
Now, Shell, of course, have just reported their latest earnings coming in, well, much more robust than the previous quarter. They've also stepped up the rate of divestment. So is this a trade that you see continuing amongst the largest oil companies?
Yeah, I think portfolio rationalization is something that has been a trend. And in the case of Shell, what we expect to see is them to raise cash, but then put it back into the business. So they raised $2 billion in the first quarter. They're going to put $2 billion into the acquisition of Cove Energy. We see that as basically a cash-neutral set of transactions over time for Shell.
So while, I mean, a lot of oil companies right now, they're benefiting from higher oil prices, aren't they? U.S. natural gas prices have dropped, to the lowest level in more than a decade. I'm just wondering how significant a drag has that been on earnings?
Not for the integrated companies all that much. It's really 2, 3, 4% for these companies. They're not big U.S. natural gas producers relative to their oil production, and certainly in the case of Shell, their LNG production, where they had actually record profitability during the quarter. So natural gas globally is actually very good. But
so they won't necessarily start to pull back from shale gas investment?
No, I don't think so. I think they're setting up for a longer-term trend. As you mentioned, it's a 10-year low in gas prices. Generally speaking, when you're at the trough of commodity prices, that's when companies look to get a little bit more aggressive in how they deploy capital.
And in terms of Shell specifically, I mean, the company is generating a lot of cash, doesn't have a great deal of debt. What does it do with this money? I mean, higher dividends, share buyback, what are you expecting?
Well, we got burned a little bit in Q1 because we expected to see a very large increase in the dividend. It only came in at 2%. I think the drum will start to beat again for dividend increases now that they put up such a robust cash flow number in the quarter. I don't know that it will happen this year, but I would certainly expect by the February board meeting of next year that you'd see a much larger increase in the dividend, I think something north of 10%.
Yeah, probably invested in perhaps more exploration as we saw with the Cove
They're already doing
bit.
that, yes, I agree.
All right, so let me ask you then about Exxon. Speaking of dividends being raised, I mean, they've raised it by 21%. You have a price target of $100 on this stock. Why do you have such a positive view of the company?
Well, it is the cash flow generation, and our firm belief that cash flow is going to be returned to the shareholder. So the 21% increase is obviously a very large increase. We think there's more to come, though. Yeah. I think another 20% over the next year is certainly achievable.
We could see a potentially volatile year for oil prices, couldn't we? Is there enough diversification within Exxon? Are those other parts of the business doing well enough to essentially offset the risk of potential losses from unstable oil prices?
They're certainly well diversified in petrochemicals and refining. Now, I think the petrochemical business is where the diversification could really come in and support their earnings, because as oil prices fall, petrochemical profitability should go up.
Jason Gammel, head of oil and gas research at Macquarie. Thank you.
Thanks, Maryam.